Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond over at the Contrarian Trader, and it is January the 28th, 2020. The month is almost over, 5 a.m. Eastern Standard Time. Let's start with the news first. The economic data first, then we'll go to the news. A couple of headlines, no major news per se, and we'll segue over and into the pre-market activity. So let's do this. Hey, good morning, RL. Let's go to the economic data that is set to be released today, which is a biggie, or biggies, I should say. Durable goods. For those not familiar, those are your washing machines, your dryers, etc. The Case-Shiller Home Price Index, not a big market mover, but I'm going to segue over to an article off of Zero Hedge in a moment with regard to real estate prices in Manhattan, and probably the same holds true for San Francisco, LA, etc. And later on this morning, 10 a.m. Eastern Standard Time, we're going to get consumer confidence. So, some fairly significant economic data, but nothing compared to what is coming out tomorrow, which is the FOMC announcement. I don't think that anybody's predicting a rate hike, but it's all about that silly press conference that Jay Powell gives afterwards. Will he have a slip of the tongue? Will he not? Will he sink the markets? I don't know. You never know. It's a very, very long press conference, and I keep saying this. I wish that they would do away with it, go back to the old days of just issuing a statement and be done with it. At least you get your knee-jerk reaction by the markets, and then it finally makes a determination of which direction it wants to head, and you trade accordingly. The press conference is just belabors the reaction by the market by probably into the next day at least. Good morning, Cherry Trade. What else do we have coming out this week? Jobless claims, no big deal. GDP could be a market mover, depends upon a big meet or big miss. Friday, CPI, Chicago PMI, another sentiment index. So a pretty heavy week in terms of economic data, but we still have earnings that are being reported. So those will trump all. So let's go to the news. And again, not that it's really news, but it's just an observation of what's being reported and what we've suspected. I was in Manhattan over the weekend. I was down in Chinatown, Little Italy, and coming home on I went down to the Canal Street C train subway station, and I have to say, what a complete and utter disgusting third world subway station that is. I mean, the Canal Street stations, Canal Street in general, is usually a sump, but this time in particular, I mean, it was just nauseating. And this de Blasio is just the complete opposite of what Giuliani was. And as much as I can't stand Bloomberg, Bloomberg was far better than de Blasio. I mean, this guy is just an absolute disaster area. And you're seeing home prices in Manhattan begin to sink at rapid levels. We're down to 2013 levels. And you can't necessarily blame de Blasio, but for the quality of life you can. You can blame the mansion tax and the SALT deductions. That's President Trump's cap on property tax deductions and state income tax deductions, which will put into effect soon after he got into office. So you're seeing the pinch on Billionaires Row in terms of housing prices in Manhattan, and rest assured, you're probably seeing the same in the other major metropolitan high tax areas, particularly San Francisco, probably to a lesser extent Chicago and LA, but this is putting a crimp in the housing sector. And another article out regarding the coronavirus. I always look for validation of what is being reported, because you can't trust the media per se with their twisted reporting, the fake news. You don't know what's true, what's not true anymore. So you look for vertical validation of what's happening in this case in China. And when you see North Korea, which is reliant upon China, mainland China, for their very existence, when you see them close their borders, that's a major concern. They're sending a message that they're afraid. And this is somewhat of a validation of what is concerning over in China, in that they do have a real serious problem over there, and it's complementing what was being reported. Maybe what's being underreported in the mainstream media, that we have a major problem out there. At least the Chinese do. I don't know if it's really a serious international problem as of yet, but certainly in China they have a problem on their hands. So more to come on this. Certainly no major piece of news, but just an observation, a validation of what's being reported in the mainstream media. All right, where are you from? Formerly from in New York. Let's swing over to Brooklyn. Now, that's where I was originally from. East 48th Street, Flatbush. Many, many years ago. My accent probably gives that away. Whistleblower indicating 60,000 cases in China. Great. All right, let's kick things off with Bitcoin. We were talking about Bitcoin yesterday morning, and you could see we were talking about the tripwire here in yellow, and this is the value of setting up a tripwire. This is your early warning indicator that you may get a run at the primary upper band of resistance, the tripwire being your secondary upper band of resistance. And you could see that we broke above, consolidated, and then we just shot higher. Now what we're doing is we broke out above the upper band of resistance, the primary. We're pulling back and retesting, and it looks as though we're going to get a continuation move higher here. Now we do have the CPI coming out later on this week. We know from our prior analysis that when you get hot inflation numbers, Bitcoin will generally trade in lockstep with those inflation numbers. So watch for a hot number. If we get a hot number, expect Bitcoin to continue to rally here. RL, you Italian? It's a big Italian area in Bensonhurst. Huge Italian area. I think to this day, still heavily Italian. I haven't been around there in a while, though. Let's check out the dollar. We'll stick with the currencies for a moment. The dollar, which was very, very weak on Sunday night, was very strong yesterday. It reversed off the lows of the Sunday evening levels. You remember, here's where we spoke about it. Here, on Sunday evening, we were breaking down. And we failed to take out the 4-hour bar here, and we began to rally, and we recaptured support. Partial Italian? Okay, that makes sense. And it looks as though we may move higher here. We had a little bit of a topping tail on this bar here, maybe a little bit of resistance above. But the dollar, as we proceed into the new trading day, appears fairly strong. And this commentary, I don't say this often than not. I think we're pretty accurate with the analysis of the day's events, but it should only be taken as my observations of how we're probably going to open up the trading session, not necessarily how we're going to close. So The dollar at current remains strong, holding support, but a little bit of topping action here. But as this contagion spreads, you should expect to see a bid under the dollar. That's why I was surprised to see it weak on Sunday evening. It was very weak on Sunday evening. Now, taking a look at gold. Gold failed to impress yesterday. And I am not enamored with it this morning, despite the fact that it is up. You can see I've already set up a tripwire here. But what has me a bit concerned about gold this morning is that overnight we broke down below this lower band of support. And we're flirting with an attempted breakout above this yellow tripwire, the secondary downtrend line. But until we begin to close above that level, I have my warning flag on the track for gold. It should have done a lot better yesterday. The miners should have done a lot better yesterday. The miners reversed on the day. I mean, they opened up strong, only to reverse. We did have a lot of resistance above. We did sell some covered calls to hedge that position. We're still bullish longer term, but very short term, we just put a hedge on, generating more income, and that's been our strategy for the past couple of months. Is continue to we're long on the NUGT. We're generating cash flow off of that position, as well as capitalizing on the share price appreciation, and we'll continue to do that until we begin to break out. We have a specific price target on NUGT we're looking at, whereas I'm going to cease selling nearer term covered calls, because right now what we're doing, and this goes for the GDX as well. Let's bring up the GDX. There's a lot more people are familiar with the GDX. So the GDX, you can see here, we're a bit sloppy. In fact, let's go to a weekly chart to illustrate my point. All right, so here's your weekly chart. We have a lot of resistance in here. And this resistance level here, you can go back a couple of years further and you'll see more resistance at this level. And what we're doing is we're working through it. And once we begin to break out above this resistance level, we're going to change up our strategy a bit. And we will be a little bit more, I'll use the phrase liberal with regards to the strike prices and the expiration dates that we'll use when selling covered calls. I always like to have a hedge on. I always like to generate income off of my gold mining position. It's just what I do. It's my style. I always like that Friday, or hopefully on Fridays we have an option expiring, and that pays for some dinner on Friday nights. You got to take your wife out, and we will begin to expand out those strike prices, and probably go further out in duration on the expirations as we begin to break out above stiff resistance, because we don't want to cap our upside appreciation as we break through significant resistance and we begin to see a lot of money rotate into these shares, because the technicians are going to begin watching. Once we begin to break out above this upper band of resistance here, the technicians will be going in and buying up these shares. So we don't want to miss out on upside appreciation for a small premium on the covered call. So more to come on that strategy with members. Let's take a look at silver. Silver had a bad day yesterday as well. Where's my silver? And I want to also take a look at nat gas. Nat gas got destroyed last week. Okay, here's silver. Let's go back to a 4-hour chart. Here's silver. This is the second time where we've had a breakout point failure on a 4-hour basis on silver. Actually the third time. First time was back here. We broke out, rolled over, failed to hold it. Back here again on the 7th, nice rally, rolled over. This was the Iraqi event, or Iranian event, I should say. And most recently here on the 24th, last Friday, broke out, and we have since given up those gains yet again. So this is a very fluid resistance level at current. So I see no reason to go running in and adding more to the silver trade at current. But we will develop a strategy, and we'll look to add more to the position. But I'm not seeing the trade set up yet. And again, this goes back to the value of adding a tripwire to your trading channels. Here's your W formation. We broke out above the tripwire in yellow, secondary downtrend line, consolidation, retest, validation, off to the races. And it's good if you want to identify when it's good to book profits on covered calls, or open up, you want to sell premium on puts, you want to take covered call profits off. I think I just said that. Sorry, it's early. Still drinking coffee. Or if you want to buy, that's what I meant to say. You want to open up a call position if you want to, because the value is you rally up and through this resistance level, you have a known price target. So if you want to buy some in the money or just out of the money or at the money call options, here's your price target right here. You book those profits and you make them real. All right, we're getting a little bit long in the tooth here. Let's take a look at nat gas. Let's go to oil first. Oil is technically more important to this market because of the potential for saber rattling in the Middle East due to low oil prices. And it looks as though we had a dead cat bounce off of the Monday lows here, and we are now breaking down yet again. Hey Trent, good morning. Hey Sam. Sam, did you change your name again? I think Bernie is going to rattle the markets. He's now paying $4.50 to win the election. $4.50 per vote. Mr. Market is going to have a seizure at Bernie. Oh, you're not kidding. You're not kidding. So here is our lower band of support. It has been broken. The question is, do we take out these lows on oil? At around $52 per barrel. This is on light sweet. So oil, very weak this morning. And if this continues, expect saber rattling in the Persian Gulf. I keep saying this. It's election year, and President Trump needs those fracking votes, and we are the highest price per barrel producer in the world. And those jobs pay a lot of money. So you cannot afford to see layoffs in the fracking industry. Especially, take a look at the junk bond market. I want to bring that up for a moment. JNK. Yeah, junk bonds are getting absolutely annihilated. I haven't looked at this chart in a few days. And this is purely due to the sell-off in oil. Now there's a trade to be had here. This is very, very oversold, as is the energy sector, and we'll be looking to trade it. But the junk bond market has some serious, serious issues here. I do expect a rally probably today. It doesn't appear as though we have broken support yet on a weekly basis, but we are very close to some technical issues here. If after a dead cat bounce, we see a continuation rollover on the junk bond market. Oh, I see, Trent. Gotcha. Okay, let's get back to the pre-market activity. So beware the junk bond market, folks. What else do we have here? Home heating oil. That rally's dead. Let's go to the weekly chart. What a beautiful breakout this was. Talk about the market sending you a signal here on this bearish reversal bar and a bearish engulfing. That was a sell signal all day long. Let's go to all right, nat gas. How are we setting up here? I'm looking for a trade in the energy sector. This is still a bit messy here on nat gas. We've been consolidating. We've been looking for higher lows. Let's clean this up. Let's get rid of all of these and start over again. Refreshing. Okay. Let's war game this out a little bit. I like to begin with the extremes. Again, folks, this is only on a 4-hour basis. But the 4-hour charts are going to send you signals of what should happen on the daily charts at some point in time in the future. If your analysis is accurate. All right, so we are holding support here. What we were looking for were higher lows. We are getting higher lows. We have no higher highs yet. I'm not all that excited about nat gas yet. RSI looks good. But that too may be coming under some pressure. We are at current trading down below the lower band of support on RSI. We need to see a little bit of strength here on price to salvage this very, very weak, let's call it stabilization of natural gas. This is very fragile. And RSI is implying that we may see a break here. We don't know that for a fact, but I wouldn't trade it at current. What else do we have? Let's go to the stock market futures and we'll wrap it up. S&Ps. We were higher earlier. Let's clean this up. A lot of technical damage has been done here. We are currently short of the triple Qs. We'll be looking to book some profits on the short of the trip Qs at some point in time this week, because I don't think that the markets are just going to go straight down here. Topping out, if in fact we are topping out, is a process. It's not generally, unless it's a geopolitical event, You want to call coronavirus a geopolitical event, okay, but I don't think it's sufficient enough at current to have a binary event where the markets just fall completely apart and go straight down. I just don't get that feeling yet. And I could be wrong. But I have traded the financial crisis and the dot-com era, and this feels nothing like it yet. So the best that could be said regarding the S&P 500 is that we're in a trading range. And it looks as though we've had a relief rally. And my guess is that there's a good chance that we break and move lower here. This outside reversal bar, this last 4-hour bar, not pretty. But I wouldn't go adding to shorts yet. I wouldn't go buying yet. Wait for a breakdown or a breakout of this trading range, and then we'll look to trade in that direction. Here's the Russell. The Russell really has been telegraphing weakness in the overall markets well before you saw it on the NASDAQ or on the S&P. That's messy. And you have a bit of a dead cat bounce here. Nothing to buy. We may be up, but I don't think that this is very healthy. And if you're looking to buy this market, if you have dry gunpowder, which is great, I applaud you. Don't go buying the first hour of trade in a market like this, because generally they'll pump the market up higher in the morning, and by 10:30 you're sitting there and you're licking your wounds because you allowed these suckers to lure you in. And you'll have the slick back salesman on CNBC saying that this is the deal of the century buying this market. Don't listen to these guys. Remember, those guys that are giving you advice are long only, in general, long only hedge fund managers or mutual fund managers. So watch for a break of support here. Now, if we begin to move out of this trading range, we break out above 1660 or even better 1665, then we may have a rally on our hands. Until then, there's nothing to do except for potentially short on a break. The NASDAQ, again, a lot of technical damage here. So all we're doing is not making any forecasts. All we're doing are setting up our rules. What must the market do to buy? What must it do to cover or go short? We need to see breakouts or breakdowns out of these trading ranges. It's simple as that. We can't control the market. The market will dictate which way we want to trade it. What else do we have here? Let's check out bonds. Bonds were on a tear yesterday. I mean, all night long, Sunday night into Monday, into the Monday close. Very strong price action. And you're seeing it continue this morning. Yields are under a lot of pressure. The banks really got destroyed yesterday. It looks as though we may be, just maybe, weakening up here a little bit. This bar opened up 29 minutes ago. No new high yet. We did see a little bit of topping action. And we are extended on RSI. And we could be putting in a lower high here on RSI. But a very, very healthy rally here on the 10-year note. And with that, folks, I'm going to say have a very, very profitable trading day. Again, please don't go chasing this market at the first hour of trade. Let it settle down first. And remember, we have economic data coming out today that can move the market. one report before, that's the durable goods order, then a 10 a.m. report. Then, of course, tomorrow we have the Fed, and we want to keep our gunpowder dry and try to take advantage of that knee-jerk reaction on the Fed news. So everybody have, again, a profitable trading day, and I hope to speak to you soon. Be well.